Okay, so here we have the 3-3 work together. And we have several transactions. We have a few more than what we have in the last couple. And all these transactions are going to affect the owner's equity. So our first transaction, April 12th, paid cash for rent, check 4. So put the 12th in there. And there's going to be more here than just rent. So you can look at the chart of accounts or use the example in the book. But this is going to be rent expense. So if you just put in rent there and it stays red, it goes red, it's going to be rent expense. Because this is an expense. That was check 4, so C4. So the rent was $650. So that rent falls underneath that umbrella of owner's equity. So by paying out that cash, and since it's for an expense, that's going to decrease the value of the business. So that decreases owner's equity. So that's going to go as a debit entry. $650 and was paid for with a check. So once again, decrease in an asset, that decrease in cash, so decreases for an asset goes on the credit side. And then the next one on the 13th, received cash from sales, $2,500. T13, so calculator tape or cash register tape. And in the instructions it says calculator tape, but it could be cash register tape too. So received cash from sales, so we'll put 12 here. And on this one, since it really doesn't go to any specific account title here that would be listed here, we'll put a check mark there. The document for this one is going to be the calculator tape, which is that same type of paper that receipts are printed out on, but they're inside the cash register. So that keeps a paper copy of all the transactions. So that's tape. It's 13, T13. But now we're going to use our sales column for the first time. It was cash from sales, $2,500. So we've got sales credit. So sales is on that owner's equity side. So any increase in owner's equity is a credit entry. So that's why it says that sales credit, $2,500. And it was cash that was received. So an increase in cash, so an increase in an asset goes on the debit side. $2,500. So we still have that balance of a credit and a debit entry. Okay, so on the 14th, sold services on account to K-Spa for $480. Sales invoice 1. We'll put a 13 there. And K-Spa needs to send us or send Norma the money at a future date when she gets a bill or he gets a bill. So that's money that still needs to be received. by Norma. So that's going to be in accounts receivable. K Spa. It was sales invoice 1, so S1. Okay, so now the accounts receivable, that's also an asset. So the amount of money that K Spa owes to Norma Dirks has increased. So an increase in the asset is going to go as a debit entry. That's $480. So 480 debit. The sale. So we'll put that under the sales credit column, 480. And then we have the next one, the 14th, sold services on account. Yeah, we just did that one. I put the 13th there. Oh, I see where I messed up. I put a 12 there instead of 13. There we go. Now I got everything lined up right. Now we're to the 19th. Paid cash for electric bill, $220. The 19th. So let's look at our chart of accounts. So that's an expense. So the electric bill is going to fall under the category of utilities expense. Like a phone, if it was a phone expense or a water expense, it's going to be normally put into the utilities expense category unless it's a much larger sum, and then it might be broken away and counted as its own expense, but typically utilities expense. So this one, utilities expense. And check 5, $220. C5. So that's going to decrease the owner's equity, that expense amount. So it decreases the owner's equity, so $220 in debit. Then we decreased cash by paying for it with a check, so decrease in the asset, $220 credit. So now we have on the 20th, received cash on account from K Spa for $255. The 20th. So received cash, so that's that account's receivable. Receipt 2, R2. So R2. So now K has paid towards the bill that they owed. So the amount that they owe is going to decrease. That accounts receivable is an asset. So any decrease in an asset goes in the credit column. That was $255. Norma's business received the money. So cash is going to increase. So any increase in that asset goes on the debit side. $255. Then our last one, paid cash to owner as a withdrawal of equity, $1,500. So Norma took $1,500 out of her business account. So we'll put a 21 there for April 21st. So remember up here on the first, we had Norma Dirks Capital. So now we're going to use Norma Dirks drawing account. Whenever the owner takes money out of an account, that's going to be a drawing account classification. Check 6. So that amount that Norma took out decreases the value of the business. It decreases owner's equity. So a decrease in owner's equity goes as a debit entry. Taking the cash out of the business decreased the asset. So a decrease in an asset goes on the credit column. As the 3-3 work together.